Hello, traders, and happy Monday. It's 8:01 a.m. Chicago time on the 6th of January, 2020. Thanks for joining me today again. Derivatives trading involves substantial risk of loss that is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1665 as we get back into the swing of things. Of course, we're back in business on Thursday. But this is the first full week of the year. And of course, we've got some potentially major news events, geopolitical events taking place with regards to the United States and Iran. And we discussed that on Friday a little bit. We'll see how it plays out. The news stream has been very, very busy this weekend. I monitor a couple of really interesting Twitter accounts that um, track military asset movement, and it seems like there was a lot going on, a lot heading towards the Middle East this past weekend. So hopefully, hoping for the best, of course. Hopefully, people can stay out of harm's way, but it just looks like the conflict is escalating, and the market is likely to keep pricing that in. As you probably noticed, risk off again. Gold really screaming up today. Gold up $24.70 from Friday's settlement. That's a one day move of 1.59%, trading at $1,577 on the February 2020 contract. Crude oil took a high pop this morning as well, went into about 64.75 or so. Currently trading, and I'm talking about WTI, not Brent, the February WTI contract. Currently trading at 63.89, up 1.33% or 0.84 cents so far. The cable's higher, still hovering around 131, and the euro is at 112. The bonds are up 7 ticks, and the Bund is up 20 ticks. The 10-year note in the U.S. is up 2 large ticks. The DAX is the loser. The DAX has been selling throughout even last night, now that it's almost a 24-hour contract. It was really leading the pack down yesterday. The DAX is down 151 points or 1.15%, followed by the Euro stocks. In terms of what came out overnight, um, there was a lot. Retail sales out of Germany came in pretty strong. It came in at 2.1 versus 1.5. Really a strong release. And then we got some numbers out of France, more out of Germany. The market PMI came in strong as well, 52.9 versus 52. The Eurozone market services PMI came in at 52.8 versus 52.4. So these numbers are relatively strong, but the market's really not responding to that. The Eurozone PPI month on month came in at 0.2, expected at negative zero point 0.1. PPI year on year at negative 1.4, better than the 1.7 negative that was expected. Um, and then we're looking for the market composite PMI final at 8:45 Central, 9:45 Eastern, expecting 52.2. And then for the rest of the day, we do have some auctions, 3-month and 6-month bill auctions, the usual. And then the rest of the day is relatively quiet. Japan gets the J-Bun Bank Service PMI final. Not really anything too dramatic, I think, scheduled for the day, but stay very, very close to your news feed today, as I expect continued releases and remarks and tweets and whatnot relating to this Iran thing. Now you notice we move from crisis to crisis, right? North Korea, and then a trade deal with China, and then that simmered down a little bit. It looked like it was getting worked out. Then a trade deal with Europe, Germany, then the Canadian Mexican trade deal, and then that ended up working out. And then now China phase one is going to be signed here in a couple of weeks, and now we have this Iran crisis. Uh, Despite all of this, what we need to take away as traders as fact is, despite all these, you know, North Korean missile tests and all this provocation and stuff that's going on in the South China Sea and so on, we still have a market that has continuously pushed highs since its low of 666 down at back in 2009 or 10, or I don't remember exactly when it was. And so, a bull market climbs a wall of worries. That the adage applies here very, very clearly. I still see people out there kind of predicting and cheering on the bearish view, and I just, it seems like it would be great to catch the high, the all-time high, and ride it for 600 points down or whatever. But it just isn't. Maybe it's a feasible thing for a swing or position trader. I'm not sure. But to me, to us as traders, day traders, it makes no sense to even give that any credence at all. Just trade what you see in front of you. And what we see in front of us today is that the market is making highs and have responded up as expected. So let's move into our review segment. This is what was expected based on the fact that we were gapping down. The fact is, as I discussed in the CT head trader chat room, as well as here on Friday, uh, despite the fact that this news came out, we still were opening around the MC point of control at 32.26 and a quarter. That's where we were trading on Friday during the trader bait. You can see that the last print, which is highlighted here, is right on top of this black line, which is the MC point of control. So the market really, despite this news, remained in balance, even though it pushed the low down to 32.06. It came back, it snapped back, and remained in balance regardless. And so the expectation on Friday was responsive buying into the prior day's range, which is right there, and looking for responsive buying that's likely to be rejected for it to come back and kind of sit sideways around the MC point of control. What ended up happening is we had an open drive open, which pushed right into, this is the prior day's low right here, this green. Let me turn off the zones. The green is the prior day's low, and that was scenario one. I was looking for it to push towards that low. I did expect it to consolidate inside of the MC point of control before pushing higher, and then pushing into the prior day's low, into the range a little bit, and then rotating back down towards 32.26. And what it ended up doing is partially what was expected, which is to push right in, a high flag, kind of a pullback continuation, and then it went into this sideways pattern that gave us an opportunity at the mid. Then it extended upwards, extended the IB high upwards. So a new high, new mid position gives us another mid trade. Then it extends that even more. What does it do? It gives us another mid trade, and now we start to see failure, right? So now, although this mid trade here was very difficult to take, now we start to see failure. We're not able to get back into the zipper up here. We're presented with some resistance right there, and we start to rotate down. So to me, this seemed like it was done to the upside. I guess it had one in it when it pushed to 45 and a quarter. But overall, we ended up with somewhat of a kind of an interesting looking profile in that we had an excess low very, very clearly. We marked an excess low up to 32.30 or so, and then held pretty much sideways for the rest of the session on almost a double distribution profile. But really, what we have is balanced a valid value area, a relatively tight value area given the range, and the market is now out of balance again. It is trading lower. The S&P is down at 32.19, well below this range down here. So that's what we are seeing and coming into for the session today. We had a beautiful return, responsive buying back into the prior range, and then we just basically balanced out and we finished the week. This weekly close reflects Friday, so it's not correct. But we finished the week last week on top of the prior week's close, essentially within a couple points. So to me, despite this, you know, ominous, oh my God, this World War III stuff sensationalized mainly, the market really is kind of snubbed off this news and has reverted back to where it has been and is not far at all from new all-time highs still. So just remember that, don't lose the big picture as we are looking at this. In the overnight session, here's what's happened in the overnight session. We've gapped down. There have been attacks on U.S. assets in Kenya. There was also a pretty benign hack attempt at a U.S. Government website, and there have been promises of attacks on U.S. personnel in Europe and so on and so forth. The market's gapping down a little bit. It opened down at 32.20 when it closed at 35. So we have from the close to the open, we have a gap of exactly 15 points lower. We could see the market reverting back to 32.30, which is what I expected. I think I wrote this. Let me check. I think I wrote about this last night, as I was updating my homework. I said, um, recall that Friday saw buying with an open drive from 32.2150. This left a tail from that session up into 32.30. So we have a buying tail up to 32.30. First line of resistance is likely to be around 32.32-ish. And then 32.36 and 32.40. And what this has done, I'll show you a portion of the profile here. What it's done, so Friday opened down here. Let me change my pen for a second so you can see. What we've done here, we've opened right there on Friday. We ticked down 2 ticks, and then we put in a buying tail that went on for quite a bit, and then we had a pullback right to 32.30, and that's the overnight high currently. So in the overnight, it has tested the buying tail, the top of the buying tail, and that's what we're coming into this morning. So very logical test there before sellers came in. It pulled back lower high, and then it releases to the downside on the European Open. I did mention also last night in the, I don't know if I put it on Twitter or Convergent or what, but I did mention that I expected the fireworks for the market to be lazy and for fireworks to kick in on the European Open, and that's where the selling has occurred. Now, the overall profile overnight shows a fair amount of balance, to be honest with you. This profile here looks weak at the low. You could see that the low was poked at quite a bit, a pretty blunt low, and the volume is heavy in the overnight session, and it wasn't responsive at all. Well, it was responsive somewhat up to 32.30, but really unsuccessfully It wasn't, it just the buyers were not able to push higher and hold higher prices. So we are hovering around the open of the session on Sunday night, my time, currently. So we're in balance in the overnight session. And to me, this looks like that 3206.75 that was put in on Friday's overnight session is somewhat vulnerable. Given where we are, if we do not see a response this morning, we may see a very, very quick drop. The next area of equilibrium, as I mentioned on Friday, is 31.99 and a quarter. That's the next MC point of control, and I would expect that that's the next big area to test out. So you can see it right here. So this equilibrium area here that we put in before the holidays, um, and you can see there's a nice protrusion in the composite. This is the next key acceptance area and is a target for anybody that's looking short. That's going to be a key target, in my opinion, for the shorts and a key balancing zone as we push lower. So it's really important to see, does the market open and respond again and take out this 32.30 on its way up to 32.32, and then the balance at 32.37, or does it fail to do so, and therefore the target, the big picture target, becomes 31.99. The bigger picture, no, it's not really a big picture target. It's well within reach. So just remember those prices as we come into today's session. Let's take a look at the order flow on CT Bookmap. The order flow was kind of interesting at night. It was relatively solid, actually, up and down. It has changed. I did post an image. I did post an image of the liquidity as I was shutting down last night, and it looked like there was a fair amount of resistance up above, and there's a fair amount of liquidity that has remained down here at the 3200 and at 3205 area. The liquidity at the five levels, 3240, 35, 30, 25. A lot of times this is really due to the strike. These are strike prices for this product, and it's you're going to have some liquidity at these levels. I'm more interested in the liquidity that comes in and it remains solid. As you can see here, it went from whitish, yellowish to orange to dark orange to red, and we have a collision, and that liquidity came right back in here, and now it's again available. This is important. This is important information, as this is likely to be the area that the market would struggle with as it pushes lower. So as we look to get short, for example, let's say our analysis is that it is done on the upside, it is likely to test lower. We need to be aware that that liquidity isn't something that's been flipping in and out, that's been sitting there all night, and we're likely to see some turbulence here. So as we get short, we would want to take our risk scale, if we have none, ahead of that area, and that's where this kind of view is important. Next comes 3205, which happens to be a strike price as well, but there's a fair amount of liquidity there, and then the 3200 for obvious reasons, and then I expect it to balance out and kind of hold steady in here in the 31.99 for a bit before it decides to bounce back up or fall off. But you can see that the liquidity's been there through most of the session. I believe the participants in here mean business. So when we get liquidity coupled with a predefined area that we're going to act, then we have a potential strong setup to lean against there. Of course, the order flow always governs where the execution takes place. For today, we're on top of the overnight point of control. We are on the edge of the composite. Let me extend this. So this composite here is what's encompassing or describing the trade in this area. We have a low volume node right there, right? So this is your 3232 area that I mentioned earlier, the thing that I typed up. 3232 is potential resistance, and then other than that, we have the MC point of control as a key magnet. So for this morning, the expectation, given the balance overnight, is an open that is likely to be responsive again to 3226. I expect it to consolidate here and then potentially give up and rotate lower to take out the overnight low. Consolidate here for a little bit before it starts to move towards 31.99. I expect it to hold steady at 31.99 before it decides whether it sells off or buys. It's hard for me to tell because as it goes lower, it's advertising lower prices to entice buyers to step in. That's the market's function. We move price to find the opposite side. The secondary is an open auction that immediately falls off as we have the scenario one is really following gap rules, looking responsive. The second scenario is it consolidates and it starts to give in and it starts to roll over down into the 3206 into that 3205 liquidity before it bounces back up, consolidates here and starts working itself back towards the MC point of control to hold steady once we've checked. Now, if we do get scenario two, in the narrative and the context of the market, if we do get scenario two where we test down and hold above 3,200 again, remember on Friday the low was 3206 and a quarter, I believe. If we do hold that low around 3205 and we come back in and go to 3226, look out shorts. It is likely to make its way back up over the next couple of days. It's essentially completed its test lower, and now we are in alignment. Once that test lower is done, um, once it does that test, now we become in alignment with the overall big picture trend, the big wave that's controlling the market here, which is a ton of liquidity coming in, a ton of money being printed. And it's likely to squeeze the shorts, the bears in this scenario. Okay. The other scenario is open, small test up, drive down, the opposite of what we saw on Friday, drive down. And now we're looking to fill the gap well underneath here. So if I pull up the master levels, you can see that there's a gap of 31.89 and a quarter mid, and that gap extends to 31.86 or so. And from from where we are now, 32.16. That's a very likely target. So if it tests up, drives down, we're looking to be in the lower 80s, 3180s for today. Okay, is that confusing? Hopefully not. That's how the lay of the land is. This is what we're looking for today. Make sure you have a plan before you start, and make sure you stick to your risk. The goal is to be here tomorrow. Good luck, and I'll catch you tomorrow morning. Take care.